Karel, thanks very much for joining us. You're obviously focused on the shopping centre side there at CBRE Global Investors. So I guess, how do you see the market at the moment? And also, what are some of the changes that you've seen over the last 12 months?
We've seen a lot of disturbance coming from all the restrictions and lockdowns and the fact that the tenants had to close. During 2020 and also the Q1, and I'm afraid also big part of Q2, we are supporting tenants because we are looking into the long-term value of the properties. And what we want to make sure is that in the long run, they remain resilient and they remain relevant for the customer. Our aim is to keep occupancy high, and that goes with actually supporting the tenants to survive this very difficult situation, because we honestly believe that retail will come back and we want to be relevant when it happens. There is certainly a different trend short-term and long-term. We can also see that some of the long-term already existing trends, which were there before COVID, have fastened, and retail overall, given online, but also other factors, is shrinking. And we are seeing that it's now much faster than it was. So we will see, of course, some of the retail space disappearing. But what we want to make sure is that it's not disappearing in our senses.
And in terms of that resilience, Karel, how do you see that developing? So what types of centre, I guess, will you be investing in, or do you expect to be more successful?
I think what's obvious and what the past few years have shown is that retail or shopping center market is oversupplied in many countries, many regions, and this is to end in the upcoming period. And that's what causes the resilience or not. And if the particular catchment area is oversupplied, then some of the assets will not survive. I think what works in retail is that there is no average vacancy rate. There is always a very low or zero vacancy rate for the best asset, and there is a huge vacancy rate for the bad assets. And this will now even intensify. So we will probably see more of the vacancy coming in some of the assets, in the weaker ones, given some bankruptcies, given the fact that retailers are consolidating their portfolios, they are shrinking their networks, and they're concentrating on the big ones. So we are actually seeing in those assets which are in a good locations, I think now more than ever before, the location actually matters. There we are seeing them expanding, and they are closing in those locations where it's not relevant for them anymore for the future.
And do you think there's going to have to be a much bigger focus on the asset management side, the operational side, I guess, to ensure that these centres continue to perform?
And again, this is something which has been there before already. And all the time you have to invest and improve retail, although you have to do it for any segment, but because everything is improving and everything is changing, but you have to be relevant. So you have to make capex, you have to invest into the assets so that they remain really physically attractive to the customers, because the expectations are bigger and bigger. And those who concentrate only on the cash flow have, I would say, short-sighted view, because it might actually work in a short run, but if you want to hold it and develop it longer, then you just have to do something with that. And that of course requires cost, but pays off in the long run.
Great, really interesting to catch up, and I'll be tracking the retail side as we move through the next stage of the sort of post-pandemic times. Thanks very much for joining us, Karel.
Thank you.